So it looks like Zillow's iBuying business has pretty much imploded. Will 7,000 homes be available at discount prices going forward? We don't know, but we'll find out shortly. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. In this case, Zillow's kind of burning itself out a little bit with respect to its iBuying business, which I think is kind of funny. And I don't know whether that's maybe ironic or poetic justice. I don't know how I can categorize that, but certainly a shock to the system and the market. Maybe all those AI or algorithms that are doing Zillow values and estimates are starting to bite them in the butt right now. So anyway, Randy Patrick here, putting the realism back in real estate, because that's what happens every so often. Things kind of reset and crap happens in this business. Today is November the 3rd. Hope you're doing well. We're into a new month. Lots going on these days. But first of all, if you want to know what's going on in your backyard, your neck of the woods with respect to distressed property, guess what? Jump on my partnership with Foreclosure.com and go to gethousingdata.com. That's gethousingdata.com. It's a very, very inexpensive method to see what's actually happening anywhere in the U.S. Foreclosure.com is the number one, I guess you say, listing source of distressed properties across the nation. GetHousingData.com. Check it out. You won't be disappointed. And again, this is where all the stuff's going to be the next little while. So please, again, this is important for the future of real estate, so you guys know what's going on behind the scenes. Why? Because the housing crash, I guess you could say it's kind of already begun. And really, if it's begun, it's kind of controlled now, right? I guess you could say that I call it kind of managed. And that's how it's going to play out. But, example Zillow, this is a great example of what's happened in the past, little while and how things are sort of starting. So a lot of stuff's happened over the past few months, and I think we're just at the cusp of greater things to come, depending on how you look at it, or more issues for the housing market. So this was my last video. So we're going to kind of go on a timeline here, what's happened with Zillow. So my last video, and oh, by the way, this was a thumbnail that I created that I couldn't put up, I guess, because I was using Zillow imagery. Funny enough, everybody else that does videos had Zillow logos and imagery and their thumbnails worked, but mine was shut down. I had to make a new one before they put the video up. Anyway, this is, going back a little bit, they halted their iBuying activity, right? So the last video, we'll take a look here, was the housing bubble peaked. Zillow pauses Robo flipping due to snags. That was a couple of weeks ago. And you can see, well, that's wonderful, and we spoke about that. But guess what? Zillow caught holding the bag as 93% of Phoenix flipping portfolio listed at a loss. So it's one of those things where, as the information came out, it only kind of got worse for Zillow. As we say here, 2 weeks ago, we reported that Zillow's electronic house flipping operation had been underperforming as the real estate company had been buying houses at inflated prices and flipping them for a loss. Now, I can tell you one thing. When Zillow released this business or implemented this business back in around 2018, they were operating at a loss, and they even stated that they were going to operate at a loss because it was for the greater good. It was to buy market share, to get things going. And Zillow might have possibly lost on the house price flipping opportunity, but it was going to make up money on fees, commissions, mortgages, title, all those additional things that happen when you close property. So they probably had some numbers they weren't disclosing to us, or ideas, and this, and maybe this was a loss later on going forward. Well, guess what? In Phoenix, Arizona, Zillow's second largest portfolio after Atlanta, things are worse than we thought, according to an analysis by Insider. 93% of the homes Zillow bought to flip are now listed at less than what they paid. Now, anybody who's a real estate investor knows that if you buy a property and you purchase it, you need to resell it, for more than you paid for it, or you're losing money. And again, whether that's with rehab money or just making a buy and sell, but you got closing costs, commissions, etc. So there are numbers that you got to factor in. So basically, what's listed, when I mean listed, it's what they're selling it for on their website is less than what they paid for it. And that's really a sign that says, hey, we got to get out of this market right now. So kind of surprising that it happened like this, but I guess they're looking at going, well, we got issues. So the review said here, out of 224 homes, 208 or 92.9% were priced below what Zillow paid. The potential losses highlight the risks of iBuyer business, which aims to buy and resell properties for a profit in a roller coaster market. So this is the thing. If you're fixing and flipping homes and buying and reselling at the peak of the market, you got to take a look at what's happening down the road, and you got to hedge your bets a bit. And maybe your ARV, which is, after repair value, the money you want to make down the road, the sales price, you probably have to build in some buffer and some loss or some correction in there, because it may not really work for you. And that's the problem when you have, who knows how their algorithm's created, and whether their algorithm is self-perpetuating. So, Phoenix, as we know from Case-Shiller, is, going up 30%, year over year every month that Case-Shiller comes out. Well, is that because Zillow has helped perpetuate that? So, hey, Zillow overbought your property, but they're going to lose it down the road. So we'll see what happens here. It's funny. It says, in short, Zillow's having issues clearing out the existing inventory. It just needs it moved. If the company sold all of its Phoenix homes right now at their current list prices, it would lose $6.3 million. Right now, their median loss per home in the area is nearly $29,000. Now, that could just be on a buy-sell side. Who knows, if the losses are greater based on staffing, resources, what they put into the property, if they made improvements, closing costs, fees, whatever. So, I'm not too sure where they got the $29K loss, but it could be greater based on how they do their business, which is, interesting to say the least, right? So this to me is kind of cool. And, given the fact that Case-Shiller indicates Phoenix real estate market's on fire, it's one of those things that, is Zillow outbidding itself? Is Zillow, who's Zillow bidding against, for these properties? So I find it quite interesting. And obviously they're talking about what's going to happen to their stock prices when that comes out. This article was from a few days ago. So the next article, so this is the timeline. So that was, this one comes here on November 1st. Zillow scrambles to punt 7,000 homes for $2.8 billion as, AI flipping scheme ends in disaster. So again, talking about Phoenix market being bad. Basically, Zillow is looking to unload approximately 7,000 homes for $2.8 billion, halting their iBuyer program. So according to this article, the iBuyer program has stopped right now. And what Zillow wants to do is, let me go back here. I jumped too quick there. And you'll see what that slide is, obviously. But Zillow is likely to sell houses to a multitude of buyers rather than package them into a single transaction. Now, clearly, if a hedge fund or somebody wants to buy them in a single transaction, they're not paying market price to Zillow. They're going to want discounts. So Zillow's probably going, you know what? Can't afford that. It's not going to look good for our shareholders, and it's going to increase our losses we already have. So they're going to make homes available. And I can already tell you that even in our market, I've looked in some zip codes, and we've seen over the past couple of days, a few more properties have popped up. And when you take a look at who owns them, it says it's Zillow Property Trust or Zillow something incorporated, which basically means they're putting these properties on the market. All these properties are typically vacant. Have they been improved? We don't know until we get in them. Some of the pictures look okay. Sometimes, though, with vacant properties, you might find in the MLS or Realtor.com or Zillow that people are using sort of virtual reality to stage properties. They can take a picture and they can put in the couch and the painting and the plant, whatever. So realize that a lot of that's what happens with vacant properties. People use, either they get it staged by professional stagers, which does cost money, or they use sort of the software now, which can actually put stuff in the room and it looks like people live in it. So that's what's going on right now. Looks like in the second quarter, Zillow bought over 3,800 houses towards their stated goal of acquiring 5,000 homes per month by 2024. So they're looking at, so their goal was to be purchasing 60,000 homes a year, and then in the next maybe 2 years. So that's a lot, and stop now. So that's a big shift as to where they thought this was going to go. In Phoenix, basically, they said 36.5% of properties currently for sale were listed below the purchase price, while the remainder of 93% started higher, only to have price reduction. So there you go. Again, this was a great for their stock and great to get investors, I guess you could say excited about this, but not working here. So now this is the most recent article, November 2nd here. Yesterday, Zillow fires 25% of its workforce, scraps Robo flipping program after huge loss altogether. So putting a pause on and selling, now we're getting rid of our staff and we're scrapping this program. So I guess this got a little more difficult as the day went on here. So it's going to reduce its workforce by 25%, completely scrap its home flipping business, which began buying homes in December of 2019. So really been working for about 2 years now, and this is kind of where they're at. So not a good scene here. Decision comes after the company lost more than $380 million in the program called Zillow Offers. Plans to take write-downs as much as $569 million. The stock, needs to say, is not happy after hours, dropping as much as 10% in the extended trading here. So ultimately, in the end, they bought 3,800 houses towards their stated goal of 5,000 homes per month by end of 2024. That's obviously not happening, and we can see that they're going to have their stock prices hurting, etc. So, oh, and also, guys, if you're not a subscriber to my channel, if you could please do me the great honor and favor, smash that subscribe button and help my channel grow. Also, like the video; that does help with search rankings, etc. And if you're not, if you're already a subscriber or think you're a subscriber, if you could do me a favor and just verify that and subscribe again, because for whatever reason, I lose as many subscribers as I put on. Don't know why. Powers that be behind the scenes. Okay, thank you very much, and I appreciate you guys. So, interesting enough, I look at, like, what does this basically mean? We know that, guess what? Foreclosure moratorium's over. Forbearance plans are ending. Any sort of regulation to slow down or stop foreclosure filings is pretty much gone, except for the CFPBs, which ends at the end of the year. So expectations is that in January, going forward in 2022, we're going to see a lot more distressed activity coming on the marketplace. It's already happening now in different markets. It's going to happen on a much larger scale. Zillow closes troubled home flipping business. So we're going to see, this is all going to be articles all over the place here. This is from Fortune magazine. But the housing market is starting to cool off. So is this the right time for them to get out? Probably is. Ultimately, in the end, people are taking a look at this information, which is kind of funny. And, Wall Street expects the troubles to continue this fall. Look no further than KeyBank analyst Edward Yeruma's research note published this week, in which he said 2/3 of the homes owned by Zillow, and at least 600 measured, are currently worth less than what the company paid for them. And basically, there's going to be some problems there. So, as I said, there's going to be write-downs, there's going to be job loss, there's going to be income loss, there's going to be stock price moving downwards. So this is not a good look for them whatsoever. And quite frankly, I know a lot of real estate professionals and real estate agents are, well, you know what? I don't think anybody's crying the blues here, because Zillow is actually arch nemesis of, the real estate agents. And, they take the MLS data that we pay for. We have to pay for our association dues, MLS fees, the whole bit, do all compliance, whatever, and and we give that. So I guess whoever owns the MLS, whatever the deal is, gives that to Zillow, who basically puts it out on their website and puts their valuations there. And another agent can actually take my listing and pay to place their face beside my listing to imply that they're the agent and grab leads from that respect. So not really a favorite among real estate professionals, I can tell you right now, though a lot of agents do advertise on Zillow. So Zillow to post massive losses. This is, you can see what they're looking at here. So obviously made some money in Q3, 4 of last year and early this year, but big time loss for Q3, and that's why it's shuttering the business down, which is the way it is. Let's be clear, this announcement doesn't mean the housing market is heading backwards. Prices are still increasing. Instead, it stems from the fact that the strong housing market, industry and insiders tell Fortune, has helped cover up some of the deeper issues in Zillow's home flipping business. So yeah, so maybe if the market wasn't so strong and posting double-digit month-over-month increases on an annual basis, or year-over-year increases on a monthly basis, then maybe this would be worse. So they're probably happy that stuff, that the market's been so hot as it is, so they're at least their stuff's not looking so bad. But again, we don't see in the future. There's a lot of analysts who are still saying double-digit appreciation for next year, whereas other locations or other groups are saying no, we expect smaller gains next year. Deceleration of value gains, cooling off of the market, etc. So that's where they see this going. Is this a sign of things to come? Well, here's the thing. Zillow, if you take a look at this, home price appreciation is a major part of iBuyer profits. So really, if home values start to decelerate and their algorithms don't work, they're getting caught with properties they've paid for and they own. So they're not putting contracts on and taking options or wholesaling them. They're actually buying them, owning them, and reselling them, you see. So this is real money for them. It's not, hey, we've got under contract, and if we walk away, we walk away. Oh, sorry, Mr. and Mrs. Seller. This is real money they've paid. So this is substantial. And this is not just with Zillow. Other home buying or iBuying startups are going to come out are going to probably have loss of money and revenue as well too. There shouldn't be a surprise. That's probably factored into their there's probably their starting the starting year's metrics and revenues, and then they're going to catch up and get it with fees, services, other things as they deploy down the road. But if there's changes in the housing market, again, you buy and sell, and if it can't be sold for a profit, then you're losing and you're stuck, right? So what Zillow's saying here, and what the really kind of their experience or their reasoning is, well, combination of ongoing labor shortage, soaring material prices, and product delays. Even lumber, which burst back in the spring when prices topped over 300% with the pre-pandemic level, are back up over 40% since August. And basically said, but don't pin the failed iBuyer program simply on the housing market or the pandemic. This business unit was a major loser, a money loser from day one. The company struggled to both forecast home prices, as Zillow's CEO admitted on Tuesday, and turn home flipping into a scaled business. Well, I don't know how much scale you're going to be. 7,000 homes is not a small business. It's a massive business. Now, granted, those 7,000 homes are distributed over 25 metro locations across the U.S. But the whole point, though, is that this is not like, a small business is doing 10 homes, all right? 7,000 is a major business. So I don't see how they were, when you say the word scaled, I don't know, I guess 60,000. Were they going to make money when they were doing 60,000 homes a year? That could have been their projection. So if they didn't get to 60 a year, only got 7,000 to date, then clearly that's not the scale they wanted to maybe deliver the numbers, the profitability they were hoping for. I don't know, but to me, 7,000 is still a pretty big number and a lot of moving parts there. So obviously, we're looking at share prices now. On the year, Zillow's share prices are down 37%. That doesn't include the additional 11% drop after hours on Tuesday. Hardly the return you'd expect from a company at the epicenter of the record-breaking housing market. So as I said, I do believe that Zillow, and I don't know if this is the right word or not, but I mean, Zillow is complicit in its contribution to the housing bubble. Why? Because they have, Zestimates. So people look at Zestimates all the time. Virtually everybody says, well, Zillow says my home was worth X, Y, and the average is in the middle. All right. Now that's the Zestimate, and you can go in if you wanted to create your own profile and own your property on Zillow, and then you can go in and make some changes. Saying, well, when I bought it 5 years ago, yeah, I bought it for $200,000, but I've added granite and hardwood and all these things, so you can actually stoke your own Zillow Zestimate by putting in your improvements, and then they're going to recalculate it and probably give you an uptick on what it's showing your value is. So it's one of those things that it's all AI driven. Who knows what the factors are, if anything else they look at. But it's kind of funny that, are they are they their worst enemy here? Because they keep stoking the market. If they buy it for X, well, we bought it for X. Does our algorithm, indicate that it's going to go up in 2 months? I don't know how their calculations work, but it's kind of interesting that, they create the algorithms, they're running by the algorithms, and they're losing money and shutting that business down. So what does that tell you about, the Zestimate and what they're trying to accomplish here? I think it's flawed, to say the least. So that's not just me, it's a lot of people. Stock price, this is just a 5-day snapshot of the stock price. You can see that obviously that, the other day on Tuesday it dropped significantly, and we've gone from, I think, I believe earlier in the year, the stock price, 52-week range. So a year ago the stock was at 212.40 and it closed at about 85 and change yesterday. So that's the, you can see, so it's obviously dropped a little bit up and down, and it had its big drop, over the past little while because of this iBuying issue dragging its bottom line. So there you go. So very interesting to see how this is actually playing out. This is interesting too. Again, this is sort of back down to the same thing the Fortune talked about. It really is, they're waiting too long. So if you think you're going to hold out in the marketplace to get that buyer that's going to overpay for your property, maybe you better think again. Obviously, the key bank analyst here has found that 66% currently listed below the purchase price at an average discount of 4.5%. And, he's seen the company, the locations at the highest percentage of where homes were listed below the purchase price were San Diego, 94.3%, and Phoenix at 93.4%, and Mesa, Arizona at 92.6%. So really, those are hot markets, and we know that based on what? Phoenix and San Diego have been the top, typically one or two markets. Number one market, Phoenix, for how many months in a row? San Diego's either been number 2 or number 3 for Case-Shiller year over year. Home appreciation every month when it's produced. So, that's the most exposed market. So the higher the markets, the bigger the gains. the harder they're going to fall, which is interesting. Now, and looking at the past quarter, Open Door and Zillow were posting net losses. 144 million for Zillow, 59 million for Open Door, respectively. iBuyers are providing a service. It's not clear they really figured out how to make money. So I think that's a really indicative statement of what's happening in the marketplace here. So what is going on? And I've not really personally dealt with selling homes or buying homes with Open Door, the iBuyers, or Zillow, etc. But from what I understand from a lot of my colleagues and people that talk to me about this, is that there are fees, and it may be easy because you can kind of get a quick number. You're not showing your house, and off you go as a seller. There's going to be fees, but you're paying for the convenience. You're paying to be able to do it from the comfort of being in your home, not having real estate agents doing curb appeal, cleaning up, open houses, whatever. Zillow and all these companies buy as is. They don't care because they have the vision of once you're out of there what they're going to do with the property, and maybe it's not really how it played out here, but they're losing money. I know part of the opportunity was they're going to capture some fees from buyers and sellers. There may have some commissions built in there with their own people working the opportunity. There's going to be some title work that they're probably going to get paid on. Any mortgages. So if the buyer needs a mortgage, kind of like when you go to a new home builder or new home community, they've got, you're going to use, if you want these incentives, which could be closing costs, or upgrades. If you want these incentives, you need to use, our affiliated, companies or transaction providers, which are title, which are mortgage, which whatever, and they're going to charge you market prices, probably throw a few extra fees in there. So they could be losing on one end, but they're going to gain the other end. But I guess in the end, the net is still a loss. That's not very positive for the marketplace here. So again, in summary here, what do we say? Well, again, I don't like when people lose money and things don't go well, but in this case, I do think it's, as I said, somewhat ironic or poetic justice, whatever you want to call the term here, that these guys, they live by their algorithm. It looks like they're dying by their algorithm right now, and everybody knows Zestimates. Everybody goes, well, my house is like, I can talk to any seller, and they're quoting me the high range on what the Zestimate says. They don't, they think, like, again, every person, their home's their castle, right? And everyone has a greater and higher opinion of what your home's worth than a third-party objective person looking at it from the street level or coming in doing a quick look here at your property. So that's the difference. So everyone loves this estimate. And I was speaking with somebody yesterday, and he had made a comment going, his neighbors are like, oh, I lost $100,000, on my home because the Zestimate changed. Well, you never had it in the first place, right? This is basically virtual. This is virtual real estate, all right? So you live in a tangible house you pay a mortgage on. You watch your home values through Zillow and the Zestimates go up and down based on the market and the environment, and it's almost like stocks, but you're not. In this case, it's like you're pretending to play the value game, but you're not really selling, you see. So you didn't lose anything because you didn't gain anything in the first place. There you go. So in the end, it's not the best news, but I think it's a precursor. It's just one more thing that sets up where we're going to have our issues in the future. So obviously, I mentioned that the shift started. It's already started. It started July 31st. Started before that, but technically speaking, July 31st was when the foreclosure moratorium was off. Right now, we're seeing the months, from now to the end of the year, and actually even going to the new year, we're going to see a lot of the forbearance people who are in forbearance programs exit forbearance. So if you see statistics that maybe sound great, going, ooh, forbearance at the lowest number since COVID started. Well, yeah, that's just spinning it into where they want to spin it. Why? Because the programs are ending. When the programs end, you resume your mortgage, or you do a loan mod, or you don't do either, and you fall into the foreclosure bucket. So we'll see how that's going to play out. Also, the gentleman I spoke with yesterday basically said that some of the Wall Street contacts he has and the lenders, like once 2022 hits, we're going to be seeing a lot of foreclosure filings coming forward, and I totally agree with that. That right now it's just based on little stuff here and there. It is increasing, so anything better than zero is an increase, and we're seeing a lot of movement stuff starting to play out now. But once the new year hits, that's where we're going to see a lot of it. So everyone I speak to is getting ready for this. You'd be surprised what's going on here. More and more people are taking notice of this, because here's what happens. If you can't make money buying and selling, if you can't make money fixing and flipping, then that means the market's going to change. We're at the inflection point. And when that changes, people are going to go to the distressed market, which are going to be foreclosures, short sales, and stuff like that. So mark my words, you'll see people suddenly becoming very interested and get involved in that business. And why does it make sense? So even now, so this is the most recent data for where I'm at, the Tampa MSA here, metro area, and it just goes to shows that there's not many short sales being done because people are not interested in them at this point in time, which is great because we're going to grow that market for sure. And the median sales price in a single family home, the median sales price in our area for September was $349,000. The median sales price for a short sale was $248,500. So just the discount's about 30%. And the equity difference is about $100,000. Now, this will change month to month based on the volume that's going on here, but you can see that just the few that are hitting, the difference is pretty broad. And if we get into this, there's going to be more opportunity, and I can tell you all about that. So just this is why we do the business. This is why people are preparing. I was on a conference call today, and I'm looking at doing a whole bunch of neat things in the next little while with a lot of different people across the country. And again, the people who are, I call the feet in the street, out in the marketplace, and I'm not talking real estate agents. There's good agents out there, and I get that. I'm not insulting them, but the people who are buying and selling at the street level, the wholesalers, other buyers, etc., who are really dealing with the marketplace, they're the ones going, we see the shift already happening, and we need to prepare for what's going to happen in 2022 and beyond. And that's going to be a good 3 to 4 years of chaos for us, which is going to be great. It's going to play a little differently than the last housing crisis, but there's still a lot of unknowns right now because of mainstream media not telling us what's really going on, data that's not really that available, and again, things that are out of our control. So us, getting stuff under control, deploying systems and strategies are the best way to go here. So be aware of your market, be aware of what's going on. So as I mentioned, go to gethousingdata.com to see what's going on in your neck of the woods. Reach out to me, please. Here, we want to engage. Lots happening. I also been working on a build to rent and build to flip program as well too for investors, which I think is very interesting, and that will help to alleviate some of the infill locations across my area here, and also give opportunities for investors to rent brand new homes or to buy, so like build and resell to buyers, because we're growing in this marketplace. So that's the scoop, guys. So anyway, thank you once again for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. Look forward to speaking with you and getting back on track. I keep saying this every week, but I just can't seem to get to it. We're very busy in the next little while. Take care. We'll talk to you soon.